Good morning, ladies and gentlemen. Today is a very, very special session from Sonam. It's been a journey for her. It's a journey for us as well at Smallcase. So it's been a 4-year journey, and we thought very apt here that we should share this journey with all our investors who have believed in Wright Research Smallcase very early on. So today is the opportunity where all the investors who are waiting on the fringes can ask all the questions to Sonam, and we had floated a form in this backdrop and we have received a lot of questions. So definitely today's agenda is more taking all those questions from our investors. Sonam is the founder of Wright Research, a SEBI registered advisor based in India, and she's an IIT grad as well. She has been managing more than now 250 crores in assets and been serving more than 40,000 clients across all her products and services. And the firm approach has always been to have an outperformance over the index over a period of long terms, right? And of course, Sonam is one of our most popular manager on our platform. So Sonam, I think just before we start, just wanted to set the context for all our investors that what's all in store for us today. So we'll be inviting Sonam to share her journey of the last 4 years as an entrepreneur, as a fund manager, as a technology enthusiast, and I think she has played many roles in this 4-year journey. So it will be great for all our viewers and listeners to hear that journey out. And of course, a lot of investors have been part of that journey as well. And post that, as I told, we have received a lot of questions. We will be taking them one by one, the questions which will be resonating with a lot of our investors. So Sonam, it's been a journey, right? 4 years, and I'm sure there would be a lot of moments for you, like markets, lots of ups, lots of lows.
Definitely, Rakesh. So it has been amazing. It is tremendously joyful for me to, talk to our investors. I can see people in the chat like Naresh and, Gulshan, who actually, I had a chat with them last week. And it is such a joy to talk to our investors. And the journey for me the last 4 years have been tremendous, right? I started this 4 years ago with no clue. To be honest, I thought I will create a portfolio, test it out live for myself, put it out on the internet, and let's see what happens. And very, very fortunately, Rakesh, you guys at Smallcase got engaged with us in the very beginning, and we saw the growth trajectory that Smallcase saw, and we saw the benefit of it. And yeah, I think our principles, that we really want to stick to, like quantitative investing, momentum investing, strong risk management, have time and again showed their potential in the market. So first time Wright Research got attention was after the 2020 crash, when the market crashed, and our risk management worked really well. So that was the first time we got attention. And then when the momentum investing strategy took off, right, that was also a great place for everyone. So I think there have been some tremendous journeys, tremendous, response we got in our last live stream, the tremendous response that Alpha Prime is getting. These things have been very amazing for us. Also, we built our team. You guys have met Siddharth, who's doing amazing job for us. We have Ashish who joined us as CTO, and, our team of around 13 people right now. So, it's been an amazing journey, Rakesh.
So today, the talk of the town, as we all know, it's all the upgrades and the downgrades of not companies, not sectors, not states, but the countries itself, right? And I think it was a big shock for most of the investors when we saw a recent downgrade of US credit rating. Now, who could have thought of that, right? So considering the recent downgrades of US credit rating, how might this impact the ongoing rally in the Indian small cap sector, right? Especially because we have always been, I think, seen over past of so many decades that, as they say, when US sneezes, the world catches a cold and all that, right? Now, this is not only sneeze. I think the US has got into a cold situation. So what are the risks? Because I think in bull markets, everybody keeps on talking about returns because that is so easy to achieve, right? You buy anything and it just goes up. I think we have always been very consistent, even at Smallcase, and even you have always been putting the spotlight more on risk than the returns. So just wanted to pick your brain on that, Sonam. How can we mitigate those potential risks? And should investors shift their focus from small cap to large caps in the Indian market, especially in this backdrop where Fitch has downgraded the US credit rating? So, of course, there are a lot of questions around US credit rating, and I think this is one question which will be useful for all our listeners.
Right, Rakesh. So I think US credit rating being downgraded is like a major event, right? And you see, there have been a number of reasons due to which this happened, from their, worsening financial situation, from their rising debt, their political gridlocks, they can't raise their debt ceilings, and it's a very complicated process. Plus, the debt is rising, the interest costs are rising for the US government. And Fitch has taken that decision to sort of downgrade US credit rating, right? So what happens in such a scenario is that Rakesh, I think US Fed will not be able to slow down their rating cycle for some time, right? So they might delay it over to, let's say, March. Any rate cut will not come this year. It will maybe come next year, right? And they will try to keep the rates high, try to keep the dollar strong, right? That's what they will try to do. And see, there will be sentiment hit in the US market, there will be a correction in the US market. But if we are talking about India here, right, and India continues to remain extremely strong, right? So if you look at Indian market, we have seen such a scenario like this credit downgrade in 2011, right? In 2011, Indian market corrected sharply around 18% when such an event happened. But both the US economy as well as the Indian economy are very, very different now. India is actually, everybody agrees, going to be the leader in terms of growth in the next couple of decades, right? And everybody has a very high projection for India. When US credit rating downgrade happens, money will move out of US and it will come to emerging markets like India. Morgan Stanley recently has come up with the view that, they have upgraded India and they've in fact downgraded China, right? So I think things are going well for the Indian market. The correction that we are seeing, in fact, Rakesh, I think it is just a correction, right? So we talk to so many investors and, people sort of get, a little bit, everybody has this question that, are we going to see a correction? Are we going to, are we at a top, right? We are at an all-time high. So, should we will see a correction. So we can understand that sentiment is there, right? People are scared about, reaching an all-time high. But I think that all-time high is a number, right? The market follows the upward trajectory, and we are only up around 8-10% this year, right? And I think we have a long way to go. The broader economy will expand, especially these exciting sectors, right, that are coming up, from electronic manufacturing to the new things happening in the e-commerce fintech space to even the manufacturing sector in India, right? So I think the rally might take a breather, because why not, right? Because it's the nature of the market to go through a mean reverting path. But I think short term and long term outlook for India remain quite positive, right? And I don't think the US credit rating should have a major impact right now.
So I think in the same breath, Abhishek, one of our investors, have a question, and I think you have partly answered that, but maybe I think he has a much more granular question around that correction bit. So of course, we all understand corrections are part of the markets now. Which correction is the start of a bear market, or which correction is a bull market, normal correction? How one get that sense? And of course, Abhishek has a very specific question. What is your assessment of different indexes, large, mid, and small, like they are oversold, overbought? And how do you see things for Indian context? Again, in the backdrop of all these downgrades, but do you see a case where investors like Abhishek should start rethinking or reassess their market capitalization allocations, and they should revisit those by booking some profits in small cap and moving into some safer havens like large caps and all that? I think that is the sentiment of his question.
Right. So see, Rakesh, whenever a correction happens, usually what happens during those times is that a sector rotation comes into play, right? Once they see this correction, they sell the sectors that are at a high, and they start looking at, because this is not a bear market correction, this is like a correction in the bull market, right? That's what we anticipate. And in a bull market, people, roll over their positions to different sectors, right? So right now, we can see that some of the sectors have become a little expensive, and what we could see, like we're already seeing, right, that sectors like pharma, IT are getting a lot of attention, right? And similarly, even FMCG and slightly defensive sectors could also get some allocation. So we could see that happen. But, if you are investing into strong, fundamentally strong companies, I don't think you need to worry about a short-term correction. And, I would not, I don't think anybody would suggest that, at this point in time, you sell and, you move out of equity markets. I think this is not that time. You could be watchful of, how the sector rotation is happening in the market and adjust based on it, and rely on your advisors who will advise you on how to churn between the different sectors. I think that is the sentiment to go with right now. And yeah, I think that is what my analysis would be.
Again, continuing the same thought, right? So at Wright Research, right, what are those key indicators, Sonam, or trends that you watch out for in the Indian markets in the near future? I'm sure you would be having a dashboard of certain key indicators which says that if these indicators are in shape or they are in check, like you are relaxed or you are good in the markets kind of thing. So if you can just share one or two or maybe some more indicators or trends in that backdrop.
Definitely, Rakesh. So we try to look at a number of factors, right? First of there are two parts of understanding this. First is you want to understand what type of market we are in, right? Is this a favorable market or is this a risky market? I think there is a fear and greed element which oscillates, but is this a structurally bear market or structurally bull market is something that we try to look at, right? So for understanding what type of market it is, we try to look at some macroeconomic data, Rakesh, and we also look at, technical data on the index, right? Price related movements, the correction that we are seeing, the drawdown patterns, etc. And based on that, we focus that is this market or is this a bull market. If it is a bull market, right, what we do is that, we don't constrain ourselves in terms of risk. If it is a bull market, then, let's allocate to risk. And as you all know that all our strategies are dynamic and very tactical. So what happens that even if you invest into a momentum strategy, right, you will see that your allocation shifts, right? You can see that as the market behavior shifts, suddenly, all these underperforming sectors will also start getting allocation as they pick up, right? So pharma or, consumer, as they pick up, you will see those allocations come in and that tactically shifts. But yes, if the risk is high, we try to constrain the amount of risk in our portfolios. But if the risk is low, we take as much risk as we want, and we trust our strategies to be tactical enough and dynamic enough to adapt to market situations. And I think the biggest points here, we've already discussed that US downgrade is the biggest point, and we've had a few questions around it. It will impact the US market, and it might not actually impact for a very, very large time. It will have a short-term impact, but India sort of continues to remain strong. India is getting inflows. India is getting a lot of upgrades, and the sentiment remains strong. And short-term correction, if it happens, would be a great time for us to relook at our allocations and maybe rotate our sectors. So I think that would be very interesting. In terms of sectoral trends, I wanted to touch on that a little bit, Rakesh, in this presentation. So, you can see that in the last, since the March quarter, real estate, e-commerce, finance, telecom, capital goods, insurance, all these sectors have done really well. And maybe when the correction happens, it could be a chance for us to relook at our allocations and maybe reevaluate where we want to invest. Similarly, if you look at industries, right, NBFCs, financial lenders, construction, and all these e-commerce services have been the leaders of the pack. And gas distribution, chemical, mining, and all those sectors are not getting a lot of attention. But if we have to watch out for the industry trends to get a sense of this. In terms of earnings, we are seeing, earnings are coming up both in India, in the US. Earnings have not been bad. I think earnings have been quite robust. Oil and gas is leading because of, those base effects, but financials, autos, and all of these sectors have done well. But yeah, media, capital goods, textile have right now underperformed, but there's a way to go.
So we all keep on reading a lot in newspapers, in print, media, everywhere. There are certain sectors or there are certain technologies that India, right, as a country is keen on mastering, right, under the global umbrella project, Make in India kind of thing. Recently, we heard about government putting some restrictions on import of electronic gadgets like laptops and all that. But like, say, hydrogen fuel, I think these are some very, very higher end industries where a major part of our import bill is footed, right? Hydrogen fuel being semiconductor manufacturing, etc. Do you think there are enough companies within India that are critical to building this ecosystem for these technologies? And is it the right time to bet for them? Or as always, it's too early or it will be too ahead of the time betting on this sector or companies for that matter? Sorry, this question was by Kumar Madhira and Abhishek.
All right. So Rakesh, I think that, this theme is emerging, right? I would not say that, the theme is not ready. I think from electronic manufacturing, right? You can see the emergence. Like if you go out in the market, you can see so many Indian products, so many Indian, people working in the electronic industry. I met a few clients from this industry as well, right? So I think the ecosystem is building, and I think the government is doing their part in putting that focus on these industries by whatever policies that they are adopting. And we can see the rally that happened recently in Dixon, Newgen, etc., because of this change, right? And I think, I think Make in India and all those policies are also incentivizing these sectors, plus the China plus one, right? China, companies are moving out of China and they're looking at India as their new manufacturing destination. I mean, I am very, very passionate about these themes. I think we will see a huge emergence, and maybe in the next few decades, these sectors will be the leaders of the Indian market. Right? So I'm quite bullish about it. And the rallies that we're seeing right now, I think they are here to last.
Got it. So you would say one can start looking at it, but not go out aggressively, because I think execution will have to still catch up. And right now it's more at a intent and the thought level, right? So it might be too early to put some serious money at play in this kind of sectors. In the time it emerges with some clarity.
I think we should have exposure to this, right? We should diversify our exposure. I think, if we all jump into a sector that is new, right, that is how bubbles are formed. So we don't want that. But I think, it's a very, very positive development that's happening, and we have to sort of allocation and have our eyes on these sectors. And I think, we'll see very good performance in these sectors in the next 2 years. And obviously these are small caps. A lot of these are small caps, Rakesh. Right, so small caps have their own analysis. You have to go a little bit granular to understand them. So, we have to look at it from that perspective.
Sure. Sanjeev Kumar and Pragati, they have some questions. So basically it's a very, very, I think, a regular question, but I think looks simple, but again, very difficult to execute. And every investor is in this dilemma always. And because of that dilemma, one ends up doing nothing, and that is more worry, right? So they always seek out some guidance on this direction. So what is the right way to invest at this point? So it's not about your sector analysis. It's not about your philosophy. It's more about whether one should approach the markets or investing via a lump sum strategy, or do an SIP approach, or the third thing I think Pragati has suggested, or one should start with lump sum and keep on increasing SIP regularly.
So Rakesh, I think this question is something that I almost get in all of my calls, right? That, should we do lump sum or should we stagger it? Right. So I don't see a problem with starting lump sum in this market. But if you are skeptical of a correction, right, then you should at least do a, SIP, right? Because what happens is when you are investing during that correction, you will see that price appreciation be much more sharper for your buying price. I don't see a problem with lump sum at this point in time, Rakesh, to be honest, because the next couple of years, the outlook remains very strong, right? I think that's the key here. But, to get comfort, if you are skeptical, stagger it over, let's say, a 4 or 5 month window if you want, and follow the SIP route. And I think Pragati asked that, should we start with lump sum and do SIP? I think you should do SIP in any which ways, if not in our small case, in other small cases, even in mutual funds or any investment product, because that goes a long way in the long term, right? So I think that is something that you should stick with. Got it.
So Ankit has this question, and I think this question is for you and me both. Maybe I'll answer one part of it at a small case level as well. So Ankit has this challenge that there are numerous small cases which exist and making it challenging to distinguish the promising ones, of course. So what sets your model apart, and what is your long-term investment philosophy? I think that is something. I'll just wait for 2 minutes before I just take the next question, and I'll just finish. So at least you will have the context. And as a newcomer to small case, I have noticed that there are volatility and high short-term risk. How can I have confidence in achieving competitive returns compared to benchmarks over the long haul? So Ankit, from the small case point of view, this is something which I would strongly suggest, that first you need to align yourself, your expectations. You need to have very clear goal, right? What you are as a person in terms of a persona, what we call investor persona. Whether you are somebody who can take high risk, that is something which you have to define for yourself. There is another thing, which is the time horizon, right? What is the time horizon you are looking for? So if you are looking for, say, less than a year, 1 to 3 years, 3 to 5 years. Now, the moment you start getting these answers for yourself, there are aligned parameters on the small case platform with which you can create those filters, and you will get a curated list of only those small cases which broadly fits into your parameters, be it on the risk side of it, be it on the time horizon side of it. In fact, there are some more parameters like the kind of amount what you want to invest, right? So you can say, I want to invest say under 1 lakh rupees. So you will only find those small cases which allow you to start your journey with less than 1 lakh of rupees and all that. And of course, there are some more parameters on the type of strategy side also. So like Sonam, take an approach with the quant base. There are fundamental, there are value, there are theme based. So I think it's more to do that introspection at your level. And once you get that curated list, of course, then that second part of the question comes that how is Sonam Smallcase different or better? But I think first step is you have to land up into a list which includes Sonam name, right? Now, if you're looking for something totally different, which Sonam doesn't approaches, I don't think that's the way you should look at it. So I think 50% or 60% of the hard work, you will have to do it for yourself. But yes, from there, a manager, small case manager like Sonam will pick up the things for you and manage the portfolio on a day-to-day basis. So Sonam, to your question now from Ankit, what sets your model apart and what is your long-term investment philosophy? If you can just share that as well.
Definitely, Rakesh. So I think, see, like you said that, our model is based, right? So we approach the markets in a very objective fashion, right? We create a system that we test it across various scenarios, various markets, and, come up with a strategy that we think can do well in the long term, right? In different sorts of markets, right? So that's what we try to do. So there are a lot of benefits of this strategy being quant based, right? You don't have those subjective biases, right? I will not buy a stock and, not sell it even though it is showing correction. I don't have those biases in our portfolio. Similarly, it's data driven, so you can explore as many sectors and industries and stock that you want. You can look at as many factors that you want to evaluate. The risk management is automated, right? So if you guys remember, right, that even when the 2021 correction happened, when the volatility started, our model said that, let's deallocate a little bit during, I think, October 2021, which was an excellent call. Even last year, we did not see too much deallocation. We went 15% at one point in time, but we came back quickly. And I think that has sort of done well for these strategies. So I think having a strategy in place, having a system in place brings in consistency, right? We know that because we've tested it across different scenarios, we know how it is going to behave, come what may in the market. That gives us that confidence as well. Plus our philosophy of looking at a number of factors in the market, trying to, master momentum investing, trying to, do very strong risk management, trying to focus what's happening in the market. I think there's a lot of benefit to it. And I think, these portfolios can give you a flavor of the market in different scenarios, and they can give you the sense of security to the risk management. Obviously, there's no promises here, but I think the philosophy, tries to understand the market and cater to what's happening in the market in different scenarios.
So maybe this is the end of first part, and before ending that first part of this session, question from Abhilash, and I think this is more of a platform related question, and Sonam, feel free to add wherever you can. Right. So Abhilash is asking, what is the right way of rebalancing a small case? So again, Abhilash himself has given two options: by buying and selling of all the stocks suggested by the app, or by buying and selling only those stocks that have been mentioned in the summary of notification for the rebalancing. So Abhilash, just to give you some sense, both are exactly the same. It's just that the app suggests buying and selling all the stocks because the app is trying to generate cash for you to buy those stocks which have been added in the portfolio. Now, not many investors might have additional cash, and that is why you see lot of buying and selling besides the one which are actually added as new stocks and which are actually taken as total exit. Now, in case if you have additional funds and all that to buy those new stocks, definitely you can do those changes and all that. But as a best practice, as a good practice, we will always suggest you to go by the app so that you don't have to get involved in that entire detailing process. And you might end up getting into a zone where your returns and the model portfolio returns might be totally different over a period of time. So we would suggest two things here. Definitely go by the app. One. Second thing, you can always do top-ups later. If you have additional money, you can always do SIPs, and all those actions will be taken care by the platform. But yeah, Sonam, you can also add your perspective if you have something to share here.
So Smallcase app handles the rebalances really well, right? You can go by what they're suggesting. And, because of the margin rule, I think, Rakesh, the margin doesn't get clear on the first day. So you can do a partial rebalance and come buy the stock next day. I think that's a very standard process and there shouldn't be an issue if you follow that.
So I think this is a break for you and some kind of, I would say, a flavor for investors to know you on the personal front as well, right? That how Sonam thinks as a person. And I'm sure everybody will pick up their own thing from this. So this is like a 2-3 minute rapid fire questions. And Sonam, you don't have to think too much. I'm sure everybody of us, we have a lot of things top of the mind. So it has to come straight with the question. I think not even taking those grammatical pauses here. And this is something which I thought would be really helpful for people to know you as a person, right? Instead of asking those routine questions. So because we are talking about investments here, Sonam, if you could have a dinner with any investor, who would it be and why?
So I think I would choose Jim Simons, right? The legendary hedge fund manager, because see, I am fascinated by him. I recently read his book and, he's given like a 60% CAGR over the last 20 odd years, right? So he's had that amazing journey. I come from, a background working with algos. And so it would be very fascinating for me to talk to him and know what he does.
Again, still giving you that comfort of your domain only in the questions. What's the craziest investment trend you have ever seen in your career? Or maybe you would have read a lot of things, but yeah, with your own experience being in the markets for last over a decade now.
So I think the craziest trend that we've all seen during the COVID time is when those meme stocks happened, right? GameStop and all this. I still have some content around it lying on my laptop, right? People on Reddit thread started pushing a stock without looking at anything. It was just the retail guys pushed the prices up and then there was a hedge fund that closed. I think that was a fascinating trend and, that always, fascinates me.
So Sonam, you anyways write so much, right? I'm sure this thought must have come in your mind as well that you should write a book one day. And I don't want to wait too long for that. So just seeding the idea today itself, what would be that one thing on which you would like to write a book? Would it be your investment journey or something else? What would you title it, kind of thing? Just seeding that idea. Of course, things will change a lot after this conversation.
So I would be aspirational, right? So we are just started. Right. So I would sort of name it changing the investing landscape of India with quantitative methods, right? We want the quantitative investing strategy to have a emergence in India, and we see so much people fascinated by it. India, in fact, has so much more smarter people than I think most of the other countries. So I think we should see an emergence of quant, and I think that is what I would aspire the book to be.
I think this is some question which will resonate with a lot of your investors, because I know a lot of your investors come from engineering background. You come from engineering background, and I'm sure a lot of your network would be of that domain, right? So major part of your life in academia and all that, you must have spent hours and hours on languages, programming languages and all that. And you must have come at a point where you would have started actually talking to those programming languages, right? Now, imagine, this is a more of a fictional question, but yeah, imagine if you are a programming language, which one you be and why?
So I think I have a clear answer here, Rakesh, and I would be the Python programming language because it's versatile. It is like English language, very simple, and I love that language. I've been working on this language for, I think, more than 10 years. I don't think people would know. I've also worked on these complex languages like C++, Java and all that, but now I don't do anything else apart from Python. So I think that is what my answer would be. Right?
Great. This will be for a lot of investors who have been tracking global markets and they keep on waking up all night. I think this is something for them. What is your coffee preference for all-nighters? Black, latte, cappuccino, or something else? If at all, you keep waking at night to catch up with the markets.
Yes. So I think, I love all sorts of coffee, to be honest, right? But yeah, if I have to pull a all-nighter, then I would go with a black coffee, which is, straight and to the point. It will get the job done, get you back into that work zone. So I think that would be.
I've seen a lot of developments happening at Wright Research. Sonam, the last 1.5 year, you have, I think, been on a journey to create Wright Research as a brand, as a platform, not only for equity, I think for multiple asset classes. And I think you have been trying to bring a fresh perspective to this whole investing thing, right? So just wanted to know, taking a pause here, I'm sure you are still in the middle of that journey. What's your most excited about doing in the near future with Wright and personally? I know all those developments, but still, if we could get some color on that.
Right. So I think that for me, the focus has to be on the strategies and how the portfolios are doing. And right. And that has to be the strong focus that we always have to do, because, at the end of the day, the investors come for that. And so that has to be the focus. As an organization, we are trying to explore a number of other things, right? So like you said, mutual fund baskets are there. We do portfolio reviews for people. We've also started our PMS, which I'm extremely excited about, Rakesh, because I've come from a trading background, and there, we'd like get to trade as well. So I'm extremely excited about that aspect of these investment products as well. Yeah, and obviously, growing and building our team, right, which is doing so much amazing work. So many tremendous people are now contributing in our team. So I think all those things are, what our plans are. Right?
Yeah, I've seen that personally, Sonam. From one woman army, now you are like almost 12-member team, right? And this all has happened in last 6 to 8 months, or I think 12 months, right?
Right. No. So we had people, but I think we've added some very, very good people recently.
Yeah.
I will not take all that credit, Rakesh, because I don't deserve that.
Of course, of course.
Yeah.
So great. Coming back to the agenda of the today's session and taking more questions forward now. I think this was a really good break for you, and maybe we can start all over again now. So we have Arind basically, who is already your subscriber to Wright, with the first product being Alpha Prime. Of course, he's a very recent subscriber. And Arindam wanted to understand the time horizon you are looking for this product, while he understands the risk and reward. But he want to understand your belief on how this will work on the rallying markets like the one we are in now. And do you believe it may continue to deliver alpha in the more stagnant markets as well, or it's just a bull market product?
Right, Rakesh. So it is a very, very strong bull market product, to be honest, right? When there's a rally that's happening in the market, we can see some insane results coming out of it, which we saw last month. And these numbers are not something that to talk about. The strategy does well in the market. That is something that we'll see. But the backtest that we see look very, very exciting. I think the risk management here, we have put in everything in place, right? Moving away from risky stocks when the market is volatile, or, deallocating from the strategy. All of those risk management is already in place, Rakesh. But I personally want to, because we've seen so much interest in this strategy, I am continually researching on how we can make the return profile even smoother and maybe reduce some risk from the strategy. So it is an ongoing thing. But yeah, I think, the backtest numbers that we see are quite unbelievable. And, it's an amazing strategy to take advantage of the bull market.
I think you were right, Sonam. So since the time we took that last session, right, I think most of the questions are around Alpha Prime now. Next 2-3 questions again in the same direction though, but I will still pick it up if we can get some more nuance to it. So Ritesh Bhatt and Aritra Mukherjee, they have some questions on the time horizons of Alpha Prime Smallcase. Is it a good idea to invest in Alpha Prime Smallcase for 10 years? Again, that lump sum versus SIP. And Ritesh wants to invest 10 lakhs to start with in Alpha Prime or some other. And he's already a subscriber of Momentum portfolio. And some more similar question, I think, from Aritra also is on the time horizon. And can I say build a portfolio of 30 lakhs in the Smallcase Momentum scheme? Do you feel there is a wall beyond which the strategy may not work optimally? What do you suggest I do then? So
we'll talk about Alpha Prime first, right? See, Alpha Prime is a strategy for the high risk investors, right? We cannot say that enough, right? When you invest into 10 stocks and which are slightly concentrated, which are following the momentum philosophy, you have to understand that this is a high risk strategy, right? And if you are aligned towards that philosophy, if you are allocating some part of your capital to take advantage of that bull market, I think this is an excellent strategy to allocate to and keep a 10-year plan, right? Why not, right? In 10-year plan, I think we would see some amazing numbers coming out of this strategy. I'm very, very positive about it. And yeah, you can allocate to it, but like Rakesh said that, you have to understand yourself and your risk profile first, right? So if somebody who comes to me who is a high risk investor, I would suggest that, along with Momentum, you do explore Alpha Prime, right? To take advantage of the rapid growth. But if somebody is a little conservative, moderate investor, I would say that, along with momentum, maybe go with a balanced portfolio or slightly lower risk portfolio so that, it fits your risk profile. Talking about the momentum portfolio, it's a much more diversified portfolio. It has delivered these amazing numbers over the last 3.5 years, right? So investing into a much more diversified basket, which has, exposure to different market caps, could be a little bit more safer strategy. I know, investors in the market are of different types. Some people do want, they say that I don't care about the risk, give me exposure to these high risk, high return strategy. So only for them, I think Alpha Prime makes a lot of sense. But otherwise, we have these amazing portfolios like the diversified momentum basket, like a balanced basket, which is slightly lower risk, but has been doing quite well, right? Which can be looked at by the investors.
I think Arun also had a similar question, which you have already answered about the high volatility and high risk portfolios. I'll take the question from Jignesh. I think he's already a subscriber of your Momentum Smallcase and want to understand how the exits are planned in this. Is it based on technicals alone, which indicates reduced or negative momentum? And this is asking as a particular stock, Max Healthcare has reversed, but it has not been sold yet. So curious to understand.
Right. So I think, see, momentum, how do the stocks churn in a momentum strategy is obviously based on the momentum indicator, right? And momentum indicators are technical. We also used earning estimates in our momentum. So that is a little bit different, but it is all based on data and, technical factors do play a role, right? So when, let's say we are picking up the high momentum stocks, right? So we have these high momentum stocks that we have collected, right? And if a stock starts going lower in terms of momentum, it will exit, and any stock that has picked up momentum will come in. But yeah, another catch here that, especially when Jignesh talked about Max Healthcare is that it's a model where we again put a limit on the turnover, right? So I don't want to send a rebalance where, I'm saying change these 7 stocks, right? And when we are working with numerical models, they can be a little bit random. They will throw out a few things. So we put on turnover controls also that, I don't want to churn too much every month. We want to, let's say, turnover only 10% of the portfolio or, slightly higher, right? So because of those controls, sometimes certain stocks are not churned out, and you might see Max Healthcare there. It might be there for the diversification benefit as well as the turnover control. And if the momentum does not pick up in the future, you will see, those stocks also going out of the portfolio.
Got it. Ranga Chaitanya, I think Ranga has 2 questions. One question is, what strategy you adopt for minimizing drawdown on your momentum strategy? Do you take cash calls and all that? Second thing, I think Ranga is asking, what are the steps to be followed to start a capital management firm like Wright Research? Okay, that's interesting.
Okay, that's an interesting question, right? So first part of it, how do we manage drawdown? First is that, we have, obviously, like we say that when the market changes its phase from a bullish market to a bearish market, you will see that the risk in the strategy, it's a system where we say that reduce the risk in the strategy. When the risk in the strategy is reduced, what happens is large caps start getting exposure slightly, maybe other factors start getting exposure in the strategy. And that is how we manage the diversification as with the risk management. But we also have a deallocation policy. So that's very straightforward. That's very reactionary. It's not anticipated. It's more like a reactionary strategy. Let's say if there's a short-term correction, in 2 weeks, if the market corrects 10%, then that's a short-term correction. If it corrects 10% in 3 months, that's not a short-term correction. So if there's a short-term correction, that means that some event has happened, something wrong has happened in the market, and you need to become safe. So in those scenarios, what we do is that, which we have already done sometimes in the last year, sometime in 2020, is we take out some money from equities, we move that into liquid instruments, and we keep on doing that till the correction is over, right? So when you do that, what happens is that the impact of the correction reduces, right? And we will not do something like, let's move everything into cash and, let's not do equities. I don't think that's the correct way, because when the pickup happens, you will not get that flavor. So we have a very well-defined systematic allocation policy that helps us reduce the turnover as well. Second part of your question, I think, is, you want to start a company like Wright Research. I think, what you need to do is, be passionate about, the type of investing style that you want to follow. Do your research, get prepared, right? So I did not start from scratch on day one, right? I have been researching all of this for years and years before I stepped in. So, do your research, prepare yourself, be very passionate about it, align your goals with it, and, work towards your goal. partner with these amazing people from Smallcase, right, who will help you in every part of the journey, I think. And yeah, and try to do well for your customers and be passionate about it. I think that's what I would say.
Got it. Great. So I think we have some quiz for our listeners and viewers as well. So maybe Siddharth can set up a poll. Whenever Siddharth, you are ready, just let me know. Till that time, I will just take maybe one or two more questions. I think these questions are more around your PMS, Sonam, which has been started recently. So there's a question by Aditya, right? It has been part of your right journey from the start, but now need to understand that if Aditya wants to grow his capital at the rate of 15 to 18%, what are the steps he need to take to ensure that he's on the right path and mitigate the correction risk and capture the growth story? And of course, he's aware that you have launched your PMS. Can you please mention the fee structure? Maybe you can connect with Aditya as well separately, but yeah, if you can just mention the fee structure and which type of target audience are you aiming to start?
All right. So thanks a lot for this question, Aditya. And you should, if you want to get on a call with me to discuss this, drop your interest on our PMS website and we'll set up a call. But yes, if you, like you said, you want to grow your capital and capture the growth story, but you want to be, you want to have strong risk management as well, right? So for that, in our PMS, we do follow the same philosophy, right? We want to take opportunity, advantage of the opportunities when they present, when the market favors those opportunities, we try to go, take advantage of those opportunities. But when the risk comes in the market, that's when you have to make sure that you are putting in strong risk management, which we try to do by diversifying, by allocating to other factors, sectors, other asset classes, even deallocation, etc., to mitigate that risk. If you see on the PMS, we have a very, very favorable, pricing structure. And for our initial set of customers, right, I think the trust is more important than any fee that we would collect, to be very honest. And we are offering two types of structures. One is a fixed fee, which is quite low. And then there is no fixed fee, but only profit sharing above a certain threshold, which can be your BSE 500. So if you do better than the BSE 500, you share profit with us. I think some people do want to let somebody else manage their portfolio. They don't want to do it themselves. Or obviously the cap here is 50 lakh. But yeah, I think that's the audience that we want to work with, people who are excited about our philosophy, what we are doing, and who trust us to, take care of their capital, right?
Great. I think Siddharth has given me a nod that he can launch the quiz. So all the viewers request you to please participate in this polling just to check your knowledge on investments, on stock markets, how passionate you are about this whole world of investing and all that. So Siddharth, maybe we can launch the polling with the first question. So which is the oldest stock exchange in India? This is the question. And of course, there are 4 options which are there. The National Stock Exchange, which we all popularly known as the NSE, the Calcutta Stock Exchange. Of course, the city name is Kolkata now. The Multi Commodity Exchange, which again popularly known as MCX, and the Bombay Stock Exchange, which is popularly known as BSE. So maybe you can answer in the comments, so you can click the poll button.
You got 58 polls, right? 58 answers, right? I can see the answers. And I think everybody is saying Calcutta Stock Exchange. Is that true? I always thought it was BSE.
It is.
It is. Oh, wow.
Yeah, it is Bombay Stock Exchange. So BSE is the oldest exchange in India.
Okay.
Yeah.
All right.
Great. So moving on to the next question, and I think this is something which you will hear again and again, but I don't know how many people know this, that who was the person who famously said once that the 4 most dangerous words in investing are, this time it's different. And definitely this time, though, it's different, right? The quote particularly resonated during the times of market volatility, or especially the bull times. So again, 4 options here, where we have Benjamin Graham, Sir John Templeton, Warren Buffett, and Charlie Munger. So this time it's different. The 4 most dangerous words in stock markets, especially in financial markets, especially.
So I always attribute most of these quotes to Warren Buffett or Charlie Munger or Benjamin Graham, right? So I don't know, but I think those could be
Yeah,
answer. I
yeah.
don't.
They are the most famous guys on WhatsApp. So any quote can be attributed to Warren Buffett and Charlie Munger when it comes to investing, and when it comes to philosophy, I think it can be Ratan Tata, it can be Chanakya on WhatsApp.
Right.
Yeah, but here we will have to give the right answer.
Yes.
So yeah, Sonam, what's the right answer here?
So I think a lot of people are voting towards Benjamin Graham.
Okay,
Right.
but the right answer is it's Sir John Templeton. Okay, and I think you can always take a cue from the number of times this phrase comes to your mind or head or your ears in the current markets, and that is where these are the kind of trends which people pick up. That was now, so everybody's saying this time it's different, so let's be away from the markets for some time. Moving on the next question. So who is considered the father of Indian stock markets, Indian securities market? Sorry, my bad. So again, we have four options here: Raghuram Rajan, Harshad Mehta, Shroff, and Radhakrishnan Damani. I'm really glad that people are participating with such large numbers. So the voting number itself says that people are so much passionate about markets. They are so passionate about listening to you, Sonam, on a Sunday thing. It says a lot, right? Somebody spending an hour for something on a Sunday means a lot. It's like spending 5 hours or 10 hours on a weekday, right?
It's the best part of my Sunday, to be honest.
Yes, unless you are super passionate about the thing. So we already had 59, 60 votes. So we will take a count here only. 60 votes we will open
Here,
up.
I
So
think, see, the options were very easy, right? So it won't be Raghuram Rajan. And I think Radhakrishna Damani is also new, right? So I think people have voted towards AD Shroff. So that's the answer, Rakesh.
nice, nice, nice.
Yeah.
Great. So we'll move towards the next one pretty fast here now. And this is very interesting. And I think this should be like totally tilted towards like 9900% towards one answer, of course. So Warren Buffett, one of the most successful investors of all time, is often quoted saying, these are the three options: be fearful when others are greedy, and greedy when others are fearful. Buy low and sell high, and past performance is a guarantee for future results. Yeah, I'm sure this, so most of the people should get it crazily right.
Yeah, I am a little confused. So I'm sure third one is not there, but first two, I thought both of them are from foreign.
There's no confusion about the person, but what the person has said is more important to note here. So what Warren Buffett has said is to be selected here.
If Warren Buffett said the third one, then they would be, the regulator will.
So I'm pretty sure Warren Buffett has said, be fearful when others are greedy, and vice versa.
Yeah. So votes are in, Rakesh. I think everybody sort of agrees.
Yes, that's interesting. Yeah, I was almost there, 90% plus. Yeah, but 87, not that bad. Okay, so which Indian company was the first to reach a market capitalization of $100 billion, right? So we have again four mega caps as our options: Reliance Industries, Tata Consultancy Services, Infosys, and Hindustan Unilever. It's not about which is a $100 billion company. I think more or less everybody is in that club, but yeah, who has reached that club first is the question. So we have Reliance, Infosys, Hindustan Unilever, and TCS. Wow, we have 53, 54 votes. I think this 59 is a magical number where there is a pause and then again it starts moving. So any guesses here, Sonam?
I would assume it's Reliance.
It is not. It is TCS.
Oh.
Somehow today I'm getting a feeling of ask an expert wala or zone wala feeling. That expert is sitting in front of me and audience is sitting on the other side, and somebody is directing the show, Siddharth. So this is the last one in this quiz. And so who noted, okay, now who observed this statement, right? In the short run, the market is a voting machine, but in the long run, it is a weighing machine. This quote underscores the influence of market sentiment in the short term and fundamental value in the long term, right? So who was the person who first appreciated or observed this thing and then, of course, championed this thought across all the markets? And I'm sure a lot of people now follow this style of investing as well, his style of investing as well, whenever things don't go your way in the short run.
Right. So I think people are confused in this one, right?
Yeah, it's such heartening to see a master and guru in one slide, right? Where even master and the student for that matter. So Benjamin Graham and Warren Buffett, right? I think they are always quoted in the same breath in whatever conversations happen in investing. Now, that is a stature someone has achieved over a period of his lifetime. Yeah, so we again had those magical 60 plus votes. 65. Okay. So I've already given that cue in the conversation. Okay. So I think it's my vote is more towards the guru, that is Benjamin Graham.
Yeah, that's what I think people seem to have voted for. That.
Oh, interesting.
Is it Benjamin Graham?
Yes, not really. Okay, it was equally across all the options, but yeah, the highest one was for Benjamin Graham.
Right.
Great. I think this brings end of this quick quiz what we did, and I think this is purely to tickle those senses of your passion towards investing and not making your Sunday morning that boring with everything on and all that, right? I think we are towards the end of the session, but with some more couple of questions around again PMS. So we know there has this very aspirational thought, but we would be very sad to share to we know that this is not possible right now. But nevertheless, I will still like to share this question for everybody's interest. So we know this already investor in Alpha Prime, which he's super confident that it will give him fantastic return. But I think he's facing some challenges on the execution front. So we know this aware that you have started a PMS, but we know this suggesting that can you have a small case which is exactly like your PMS in terms of strategy, and not only strategy, but even the execution can be taken care. He's ready to open a new demat account, but he's not comfortable or he's not ready with a minimum investment of 50 lakh. So currently he's okay to invest 10 lakh rupees, and he expects that fees can be similar like a PMS and all that stuff. So, just two things from my side, regulatory wise, a lot of things what you have just suggested, though are great suggestions, but Indian regulators don't allow that kind of structure. So PMS is something where you have to invest minimum 50 lakhs. That is the way regulations are designed. And of course, anything below 50 lakhs, you can definitely go towards the advisory. Execution again is not something which advisor can do on your behalf, even if you give that letter, which you have given a suggestion. So yeah, so this is what it is right now. Of course, in future, if things change, we have tried to make the platform so seamless that at least you don't have to spend too much time in executing. It's just like 2 or 3 clicks here and there kind of thing, and your execution will be done. But still, this is where things stand today. So Sonam, your thoughts in having a small case with a minimum ticket size of 10 lakh and AUM fees, do you have any plans or any thoughts on this for future? Because currently, I think most of your small cases are on fixed fees, but yeah.
No, so Rakesh, we actually, in fact, for most of our small cases, we have an AUM version also. And if somebody, you can just reach out to us. We don't push them. We don't put them on the small case platform because it clutters the whole thing a lot. But we have AUM versions rebalanced regularly. You can just drop us an email. We'll send you that link if you want to participate. And like Rakesh said, right, like all these constraints, right, that 50 lakh investment or, execution and all that, that is a regulatory rationale for it, right? And India is an emerging market. Regulations are also emerging and will evolve. And hopefully, soon regulations will favor us to, make this process much more smoother. But right now, within the regulatory constraints, we have to follow this structure. But I think with a 10 lakh capital, small case is an amazing platform for you to invest into. You follow the rebalance schedule as given by us, and you would follow the strategy, exactly as it is. You would get the whole flavor of the strategy. And, in terms of pricing, I think flat fee for a 10 lakh would in fact be better, but we also have an AUM fee that you can get access to. Please do write to us, and I think you won't have any issues with the small case structure as well, right?
So I think with this, Sonam, we come towards the end of our session, but as promised, there are a lot of investors who have made up their mind to start their investing journey with you. But again, you always need that, I think, nudge or some confidence from your existing investors as well, that how has been their journey. So I think we have 3 investors with us today who have been kind enough to share their journey with Right Investment. And I believe investment is too personal a journey, but I think it's all the confidence with which they are being navigating the journey with you is what is making them share their journey with the overall audience here. So just to introduce, Abhishek is a chartered accountant and who have been himself understanding finance so deeply and all that, but still have been always appreciating the fact that there are some specialists who will do this job much better, and who better than Sonam. That is what Abhishek is all about. Ishita and Jigar also will be sharing their journey. So Siddharth, over to you. If you can just share those videos.
So, I'm a chartered accountant by profession. I've been practicing for the last 10 years. I became a chartered accountant in the year 2012. So since then, and since we have a family firm sort of a thing, my father is also a CA, so it runs in the blood. So we've been practicing in this firm for around 35 years, and I have joined it 10 years back. So I do have a bit of an insight on how to read financials and how to understand them. And I got fantastic returns, and I saw why not invest some more time and energy in trying to research stocks and trying to find out good multi-baggers and stuff. So while doing that, I realized that it's not everyone's cup of tea to get into the stock market. Even though I'm a chartered accountant, I might know my job of filing taxes and returns and all of that, but the stock market is a whole different ballgame where you have to know a lot of strategies and you have to understand how the stock market works and how it moves and how not just financials but emotions also affect the stock market a lot. So what I did realize was that this is a complete separate vertical that needs to have its own set of expertise. And just by virtue of being a chartered accountant, I cannot be an expert in the stock market. So while speaking to this friend, he introduced me to this platform called Smallcase, which is a very, very wonderful platform, and I've had a wonderful experience. And through Smallcase, I discovered a portfolio of Wright Research called Wright Momentum. The returns I have in Wright Research portfolios, I'm currently subscribed to two of them. One is Wright Momentum, and the other is Alpha Prime, which I recently subscribed. So Momentum is giving me around 25%, and Prime is giving me near about 10% in a month or so. Which is a very good return, but it's a volatile portfolio. So, I'm keeping my eggs in different baskets. But having said that, the portfolio returns that I'm getting on Wright Research or Smallcase as a whole is much, much higher than what I'm getting on my individual portfolio. Keeping that in mind, it's not like I can't do it, but, I would rather outsource that to someone who does it as a full-time job than me having to sit for 3-4 hours trying to find out things about the company and then make my investment decision. Going in for advisors like Wright Research, which I am very actively subscribed to, is a much, much better option to sit back with a peace of mind. And having to pay 500-600 rupees a month is not a very big amount if you are investing at least maybe 2.5-3 lakhs in a portfolio.
Glad to be here. Just a quick intro about me. I'm a product manager at PayPal. I've done my undergrad from BITS Pilani, Goa, and did my MBA from ISB. My father is a retired Air Force officer. My mother is a principal at international school. Both of them are not an active investors, I would say. I mean, I did not learn investing from them, but yeah, now they are learning from me and my husband. When I started investing, couple of things, being from a non-finance background, right? There are folks who have done CFA or they are from finance background. Being from an engineering background, you are really not taught that much about finance and how to manage your financing, personal finance, etc. So I got to know about Wright Research from a friend, and again, that was the time when I had started exploring these different instruments. So I thought, okay, let me just try it out. I mean, I had some lump sum money, so I started off with Wright Momentum, and then I'm still invested. It's been more than 2 years now, and that's kind of a testament that I am happy with the performance of the portfolio. It has been a consistent investment that's been happening. I started an SIP, I increased the SIP amount as well, and whenever now I have any lump sum amount lying idle, I put it in that portfolio. And it's just the ease of investing. Like, I don't have to worry about the same thing that I mentioned, right? Like when to remove your funds from a particular stock or mutual fund and put it into another. All of these things are taken care of, and I get the rebalancing update. I can simply rebalance. So, and plus I see how it has performed through all the ups and downs, like with the COVID downfall and other like market trends. I see a good XIRR that I keep a track of. So I'm pretty happy with it. And yeah, I'm looking to invest more in more strategies. So yeah, that's something that's on my to-do, and hopefully I will be investing more.
99 से लेके 2008 तक, जब तक लेमन क्राइसिस आई, तब तक वी आर वेरी सक्सेसफुल ट्रेडर. उसके बाद लेमन ब्रदर्स के बाद मार्केट सिनेरियो में थोड़ा एकदम चेंज आया. उस टाइम पे ये अल्गो ट्रेडिंग तब स्टार्ट हुआ. ट्रेडिंग में जब पैसा आता था, लेकिन ट्रेडिंग में पैसा आता था, लेकिन वेल्थ क्रिएशन नहीं हो पाती थी. तो उसके लिए क्या करते थे कि इन्वेस्ट करना बहुत जरूरी था, लेकिन इन्वेस्टमेंट के लिए हमारे पास कोई ऐसा हमारा बैकग्राउंड नहीं था, तो उसमें हम कभी सक्सेस ही नहीं हुए। तो बाद में हमको लगा कि जैसे हम ट्रेडिंग में किसी से नहीं पूछते हैं, तो उसमें हमारा बहुत क्लियर माइंडसेट है। तो ऐसा अगर हमको इन्वेस्टमेंट करना है तो कोई ऐसा होना चाहिए कि जो इन्वेस्टमेंट के लिए प्रॉपर वो हमको गाइडेंस दे सके, तो उसके गाइडेंस में हमको जाना चाहिए। हमको डायरेक्ट इन्वेस्ट नहीं करना चाहिए, क्योंकि डायरेक्ट इन्वेस्टमेंट अगर नॉलेज नहीं होता है ना, तो फिर वो बहुत हार्मफुल करता है मनी को। रुपए पढ़ा सोनम जी के बारे में, तो मुझे लगा कि ये जो उसमें लिखा था कि उन्होंने आर्टिफिशियल इंटेलिजेंस का यूज करके उन्होंने सब कुछ किया हुआ है, तो तब से मेरा अल्गो आया था। उसके बाद मेरे को इतना पता चल गया था कि कोई नई टेक्नोलॉजी है, उसके साथ हम जाएंगे तो हमको कुछ बेनिफिट तो जरूर होगा, क्योंकि चेंजेस हर टाइम मार्केट में आते हैं। पहले मार्केट में हमने बोल के भी सौदे किए हुए रिंग में जाके, उसके बाद हमने कंप्यूटर पे भी सौदे किए, और इसके बाद जब अल्गो आया तो अल्गो का हमको कुछ नॉलेज नहीं था, क्योंकि उसके लिए जो पढ़ाई होती है वो हमारी थी नहीं। तो मैंने सोनम जी से उस पर उनका कुछ टेलीफोन नंबर था, तो मैंने उसको फोन किया, तो उन्होंने काफी अच्छी तरीके से हमारे साथ बात की, और फिर उन्होंने बोला कि हमारा ये स्मॉल केस में चल रहा है, तो बैलेंस फैक्टोरियल करके उनका एक स्कीम था। उसमें हमने पहले बोला कि मैं क्या करता, उन्होंने बोला आप इसमें थोड़ा पैसा डाल दीजिए, और आपको उसके बाद आपका परफॉर्मेंस देखिए, फिर आप आगे हम बात करेंगे। और डे बाय डे उसमें रिटर्न हमको अच्छा मिल रहा था, और जो स्क्रिप्ट वो सिलेक्ट करते थे तो वो मार्केट के साथ बढ़ती थी, और जो निकालते थे वो मार्केट के साथ फिर हमको रिटर्न देके जाती थी। तो फिर दूसरी बार फोन किया तो उन्होंने दूसरा भी हमको सजेस्ट किया, तो मैंने फंड भी बढ़ाया और दूसरी स्कीम भी ले ली। तो उसमें भी मेरे को अच्छा रिटर्न मिला, करीबन समझो 2 स्कीम में मेरे को 22% के CAGR का रिटर्न मिला है। मैं उनके साथ 2 साल से जुड़ा हुआ हूँ। फिर मैंने वापिस फ्री पढ़ा था, तो मैंने फोन किया कि उनका कुछ अल्फा करके स्कीम आई है अभी नहीं, कि चलो इसमें करने से पहले उनसे बात कर लेते हैं। तो फिर उनसे बात किया, तो मैंने पूछा कि आप PMS भी करते हो, तो क्या हाँ PMS करते हैं। तो जैसे मैंने बोला ना कि मुझे उनके साथ काम करने से इतना पता चल गया कि ये AI का यूटिलाइजेशन करके उनका काम अच्छा चल रहा है, तो मैंने बोला हमको PMS में भी इंटरेस्ट है, तो फिर हमने PMS का डिसीजन ले लिया।
Thank you, Jigar. पहले first of all, Rakesh, Jigar is, I love talking to him so much. He calls me, he lives near Ahmedabad, right? And he gives me so much confidence every time I talk to him. And he's so passionate about what we do. So it's amazing. His son also works in a much smarter firm than me in the US. So, he has a very good background, and
Great.
amazing hearing from everybody.
This is really helpful. I think, Sonam, it's always great to hear the experience of clients from clients themselves, right? No matter how much we talk about ourselves, I think this is more of a trust which gets built over a period of time. Because there are always two things, right, in market, and which I always keep on saying to a lot of investors also. Money should be made in markets, and money comes and go in the markets, but it should not be because of the integrity or the trust level issue of the money manager, right? So markets will take its own style of creating wealth and all that, but it should not be because of somebody intent, integrity. And I think people value that a lot, and people really appreciate whatever you do and you have been doing for the last so many years now. So I think we have some more questions, Sonam, on the YouTube chat as well. Of course, there are a lot of questions. So what I would suggest is, of course, a lot of answers have already been answered by Siddharth on the chat itself. But maybe I will just pick up maybe 2 or 3 more questions, and rest questions I'm sure people can reach out on info@wrightresearch.in as suggested by Siddharth also. So again, some more question around your PM. How different your PMS portfolio will be when compared to small case portfolio? I know it has to be different because the investors are different. This is asked by Yogesh, and I think even Shyam has a similar question. Understanding for a smaller capital, small case is preferable. He understands that, but it requires 50 lakh PMS. So your thoughts?
Yes, so see, Rakesh, the philosophy that we are following, right, the quantitative philosophy, that remains the same across both the strategies. Obviously, they are very different, right? PMS may the stocks that we have and the small case, there's a little bit of overlap, but they are quite different. PMS may, we can also trade on our own, right? So we don't have to send an update and do all that. So that gives us opportunity to be a little bit more tactical. Yeah, and I think with the PMS that we have launched right now, we are trying to follow a multi-factor approach. So it's not just momentum. It includes in momentum and other factors, and there's asset allocation component as well. So I think, yeah, there is, the underlying, philosophy as a company sort of remains the same, but the two portfolios will have difference, and obviously the execution will also make a difference, right, between the two.
Got it. So one more question from ZX, when is a good time to rebalance? Is it on opening or closing? And for the same rebalancing, there is one more question that at times rebalancing generates net receivables and payables. So again, on the receivable payment front, it's more about those miscellaneous amount which will come up to add to your rebalance, because a lot of times there are some stocks which gets added and there would be some money which has to be added. And as Sonam mentioned earlier also, because of the new margin rules, you don't get the entire credit of what you sell today itself. So in that scenario, you might have to add some more money, but if you come on the next day, you can always do that rebalance without adding that money also. So that is one part of it. But yeah, on the opening or closing, Sonam, what are your views? Whether one should just do the rebalance at the opening of the markets or towards the closing of the markets?
Right. So Rakesh, I think the rebalancing prices that you guys show on the series, they are based on an average of opening and closing, right? If I'm not wrong.
It's average of open, high, low, and close.
So I think you guys make sure that, we are accounting for any shifts that's happening in the market, right? So I would recommend that, trading when the rebalance comes might be a good idea, which could be at the open, or, you can wait out for the last, at the end of the market. That's a VWAP where a lot of trading happens and a lot of price discovery happens. So that could also be a good strategy. But I think the small case series takes into account, like Rakesh said, open, high, low, close. So either trading in the beginning or in the last 30 minutes, it would depend on how the market is on that day, of course. But yeah, I think you can try to follow it as closely as it comes, right?
But in the long run, I think everything gets taken care of if you are very consistent about applying the rebalances and all that. So that shouldn't be much of a problem. So Sonam, I think most of the questions have been taken, and I think there are some more questions which is around your PMS. What maybe it's just a suggestion. Maybe you can pick it up later. Maybe you can have a focused session for your PMS as well. I'm sure there would be a lot of nuances to that product as well, and there would be a different set of audience there as well. So that can be taken up definitely on your, and I'm sure you are already doing that with a lot of clients, one-on-one sessions and all that. And because it's a very, very specific bespoke product, so I'm sure there will be a lot of interesting details there as well.
So I think drop the link. So if anybody is interested, you go to that link and you just drop in your details and we'll set up a call with you.
Sure. That's helpful. So Sonam, yeah, I think this is from my side. I think we already surpassed the time by almost 25 minutes, and I'm really happy that people are still hooked to the session. And this is something which I'm loving a lot. And this says a lot about the kind of work, what you're doing. And there are some things wo express kar nahi pate, but I think 100 plus people watching on a Sunday morning itself says a lot for your work, what you're doing. And I'm sure our relationship has been great and we are just going strong by the day. We also get a lot of testimonials because of the kind of work what Wright Research is doing. So of course, we have been complimenting each other from day one itself. So yeah, all kudos to our teams as well, respective teams that we have been pulling this off. And of course, market has been kind enough for us also. So yeah, this is from my side. Sonam, any closing remarks from your side, and we'll call it a day.
No, I think, like you said, it is, it's a huge joy to see everybody join on a Sunday. And I would just wish everybody has a great Sunday. And I think we hope we have a great week ahead. That would be my closing thought. Yeah.
Great. Thanks a lot, everybody. Once again, we will keep on doing this engagement. Yeah. So thanks a lot again, Sonam, Siddharth, for pulling this off on this Sunday, and looking forward for more such engaging sessions.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Don't forget to like this video and subscribe to the Wright YouTube channel. We will be back with many more insights, reviews, and market updates in the coming weeks. Till then, click on the bell icon to stay tuned for more such amazing Wright updates. Happy investing.